welcome to the UN Brief. Today we interview Daniel Keiper-Knorr, his founding partner at Speedinvest, a venture capital firm in Vienna. Thank you for watching and listening to the UN Brief, and don't forget to subscribe.
I'm in the industry of technology and innovation for over almost 25 years now. Initially started in late 99, early 2000s with our own technology company over here in Vienna. That got venture capital funded literally at the burst of the back then dot-com bubble, followed by 3 very, very tough years until we finally managed to turn the company around, bring it back to profitability around 2004, 2005. That eventually ended up in a successful trade sale 2006, followed by a few-year-long earnout and lockup period until late 2009/2010. And then we regrouped in the former team and thought what could be next, and came up with the idea of starting a venture capital fund. Basically, with all the learnings we took along over the previous 5 to 10 years to kind of, at least in parts, rebuild the idea of venture capital for specifically designed to the needs of pre-seed and seed stage technology first-time entrepreneurs.
You still invest on pre-seed right now?
Yeah, we that is the investment DNA of our firm here. So now fast forward 12/13 years in, Speedinvest started out as a 10 million AUM small boutique located with an office in Vienna and an outpost in San Francisco. Over the following 12 years, the firm grew considerably. It is now managing more than €1 billion assets under management across a series of funds in the range of 10 to 300 million in size. And now more coming to the topic of the call, we very early in our development and in the process realized that, like with any other industry, at some point in time specialization kicks in, and we anticipated this to happen also for the venture capital industry. So we started out as generalists. By what we have brought on with our own entrepreneurial experience, we focused on a few specific topics within the broad range of technology, and we constantly added new topics to this. When looking at the whole topic of energy transition and deep tech and industrial tech investment thesis, that we already started back in 2015/2017 around, when we even launched a group of 3 sector-specific funds, one focusing on fintech, one focusing on the business model of marketplaces, and one focusing on industrial tech. And out of that industrial tech topic, that is covered by a specialist team, as is all the other investment topics are covered by a team of specialists. So is the industrial tech team. We raised a first fund. We are now raising.
When you say industrial, you're thinking of space tech, for instance, or?
No, industrial tech to us. So we are focusing on software. That is what we've done ourselves in our previous entrepreneurial life. This is, I think, where we can judge, or where we can detect, where we have access to deal flow. We have the required experience and expertise in the topic to really contribute value add beyond the sheer amount of capital that we are able to deploy.
Right.
Specifically,
Understand
seed
how
stage
the technology
pre-seed
works.
stage, capital cannot solve all problems.
Right.
That with further on development of companies, the sheer benefit of capital in relation grows, but in the very early stages, capital is a requirement, but it's not sufficient to solve all problems.
Yes.
Access to experience, access to know-how, access to network, access to also reputation, helping the young companies that don't have any track record to show to break into their own business, signing customer contracts. So much more is needed than capital alone. And this is what we learned by our own experience, and this is that we then are now deploying to our portfolio companies. And yes, addressing the question, despite the growth of our AUM, we still focus on pre-seed and seed investments. This is the sweet spot of our investment strategy. That is the DNA of our firm. Obviously, we added more funds to be able to continue investing in promising scale-ups from our own portfolio, which a few years back or several years back we have invested from our core product, which is a 300 million seed stage pan-European technology fund. And within this, industrial tech, in the sense of software to be deployed to improve the industrial manufacturing process. And along with this comes the focus on the whole topic area of climate-related investments, including decarbonization, which is not a vertical to us, but a horizontal technology. All industries, all business models need to contribute to the climate reversal of climate change and energy transition. We think that the lever one has over the industry is bigger than the lever one has over the consumer. So saying decarbonizing the car maker is more efficient than decarbonizing the car driver.
Easier in a way, because you have the
you have more control over the full value chain, over the full life cycle of product, thinking circular economy. It cannot stop by the sale of the car. At some point, all output needs to be as far as possible recycled. And this, we think, addressing the production side is one has more leverage than addressing it over the consumer side.
Interesting, very interesting point. And do you work with the European Commission, the Horizon Europe, and all these funding mechanisms?
Yeah.
They are looking to partner with private sector, with venture capital firms as well. Do you have any sort of projects ongoing with them, or? Yeah,
well, we have a European Investment Fund since 2 fund generations as an anchor investor in our firm. It took us a while to get to terms with them. In the beginning, our funds were too small. The concept was too strange, or maybe too novel for such a large organization to adopt very quickly. But now, since 2019, they are a constant and large and also very important LP investor in our fund. And along with that comes a lot of Access Horizon program is more typical, not so much on our fund level, but on single portfolio company level. These programs, a large part of the portfolio companies are applying to these programs, are making use of these programs. But basically the very big leverage, to our strong belief, comes to capital deployment on a very high level through fund of funds and direct funds, because there you have several layers of professional management, then in more granular and in detail allocating to specific firms. I think both approaches are important and needed. However, I think and I might be a bit biased with that, I admit, but I think the deployment through funds should be significantly increased.
Yeah, and also with deal flow, perhaps it helps because they have lots of companies that come to
deal flow actually is not so much of a worry to us. We screen between 8,000 and 12,000 opportunities every single year. And we are not an outlying large deal flow processor here. Our peers in the market, they report similar numbers. Obviously, that correlates a bit with the size of the firm and the size of the AUM a firm manages. But same AUM size firms report similar deal size figures. Ours is 8,000 to 12,000 every year, and out of those we pick like 30 to 40 for an initial investment. So less than 0.5% of what we see, we actually end up investing in.
So in the climate change space, what do you see is exciting right now? What kind of companies would you say you were, have you invested that you see?
Well, a very broad range. All companies taken to combined is probably a sub-portfolio of nearly 20 investments that we have done so far. And we literally look at everything. But then obviously we can only invest where we also come to the conviction that this can be a commercial success. We have an obligation towards our LPs to quintuple their money. And for achieving this goal, we have set out this specific strategy that, among other topics, includes the whole climate change challenge. And there we did, solar power grids. We look into lithium-ion battery management, recycling of batteries. We look into, circular economy, supporting business models. We look into nearshoring and onshoring of what so far has been outsourced to distant geographies, ending up with a massive CO2 footprint through the sheer. We look a lot into logistics with that respect. For example, using marketplace business models and so-called platform business models through the transparency they intrinsically create in a market to, over time and overall, reduce the total share on value chain of logistics. Because if you bring transparency to market, all of a sudden a buyer notices a supplier which is 100 kilometers closer than his current supplier, and by switching over to that supplier helps in cutting out unnecessary CO2 emissions. So transparency, it's on a very high up and aggregated levels. Ideas like transparency in markets, driving down prices, bringing more competition to the benefit of the whole economy and society, democratization of access to assets and tools and services that so far were restricted to a too small part of society in the economy to really have a climate positive impact. Then, of course, the whole topic of decentralization, massively important. Because decentralization inevitably ends up in reducing logistics, and not only physical logistics, but also data logistics. So these are on a very high, almost philosophical level that we build, that we are kind of, inventing and phrasing and constantly reviewing and reworking our several investment theses that we, along which we are building our portfolio. So topics, decarbonization, decentralization, democratization, and everything that comes with it and then is required for this or is triggered by this is part of our investment strategy.
And to wrap it up, what other sectors you are investing, and tell us a little bit about it in terms of how do you frame it also?
So as said in the beginning, we are a software investor. This is not chosen by, accident. This is where we had our own 10, 12-year entrepreneurial experience. This is where we had an expertise in the market. This is where we think we're able to judge good ideas from bad, good products from bad, good teams from bad. And that is key in investing. So within software, we identified 6 sectors so far. We started out with 3. 12 years back, we've expanded this to 6, and we are constantly reviewing and assessing new ideas and probing them. And so as of now, we do in order by size of internal capital allocation: fintech, marketplaces, SaaS, climate tech, health tech, and deep tech. So that is the 6. So SaaS and marketplaces are 2 horizontal approaches over 2 software-specific business models. And then we have the 4 verticals addressing financial services, in industrial and manufacturing, healthcare, and deep tech. And within deep tech, that strict software focus is a bit softened. In deep tech, we also explore hardware areas, material science. We've recently invested in a groundbreaking new LED concept that is even more energy saving than the already very efficient LED technology, but again by a factor of 10. And assuming that displays in what sort of size and usage will become ever more important, and that is a significant contribution to energy savings. Then the whole area of quantum computing. You cannot do quantum without touching hardware. Impossible. So in those areas, we are not so strict software only, but in all the others where it's about deployment and application layer, this is purely software. The more it gets to the core, the more open we are to hardware related investments, and it is for the time being focused on our deep tech exposure. It starts reaching into obviously industrial tech and health tech, whereas the other 3, SaaS, fintech, and marketplaces are for the time being, and I expect this to prevail for quite a while longer, software only.
Thank you very much, Daniel Keiper-Knorr from Speedinvest in Vienna, Austria. Thank you so much, Daniel, for taking a moment to speak with the UN Brief.
Thank you very much. It was a pleasure.
Pleasure too.
Bye, everyone.
Have a nice day.